I'm listening to the jobs report, so let's see. Your channel. I think I'm live. I don't think I'll freeze today. You okay? Something's up. I don't know if you feel okay. Am I frozen already? No. No. Let me see. If I go to YouTube, yeah, I'm live. There is Savvy Trader. Here is the pricing. You're down to 63% off. On TrendSpider. Renew that one. We're going to close this. Close Seeking Alpha. We'll go to the home. Okay, that one. Golden Cross Strategy. Okay, there we go. Okay. Okay. Nobody's joining today, Mickey. Okay. And DraftKings is up over 30 again. Woohoo! Yeah. Nasdaq's killing it. I can't turn on Active Trader Pro. I think that was why I froze yesterday. So I'm going to turn this down because we're going to do some scans. But pre-market, wow. Everything jumped up. I mean, PXD, how can you argue with this trade? I mean, this trade is just killing it. We've gotten since we got in under 200. I mean, not quite under 200. I got in a bunch here between 208 and there. I got in back here. So you've gotten at least 2, if not 3 dividends. That's been a great one. Snowflake, that's going to go up to 180. It's up 1.7 at 160. I said when it got into the 140s, it was a trade. Uber, I didn't pull the trigger again. I just never believed these breakouts in Uber above 40. I'm just going to buy it again. God, why would I ever believe those breakouts on that one? Meta, it's going to go over 300 again. Let me pull this back. Get rid of this. Remove all annotations. Okay. Market scanner. I got an interesting email from somebody last night who said they're late 40s, have traditionally been a buy and hold, kind of like me. I mean, I was significantly a buy and hold. And they found my podcast and have been listening for, 3, 4, 6 months, somewhere in that neighborhood. And this is low cost Vanguard. And I've changed their mind. And so they've started trading with their son, which is great. How in the world, Sundial, I mean, this is a pot stock. It's popped. Let's see. I guess, markets have been going up so much. Scans. That we've already had all the cross ups. Let's look at the Dow. Anything cross up on the Dow? Do nothing. Let's look at NASDAQ. Can't believe there's nothing that crossed up. But we may just be in a... How is that possible? There's no way. Let's look at S&P. I think there's something wrong with the data. There is no way. Let me see. Let me look at the 65-minute. I mean, there's a shit ton in the 65-minute. This scanner, so you know what this does, and this is included if you sign up for TrendSpider, is it looks for all of the stocks that are currently a buy in the 65-minute time frame. So, and look at Uber. I mean, Uber, it's clear. Dips under the 200-day, grab it. You're about to have a golden cross on that one, on that 65-minute. Whatever charts you look at, whatever time frame you look at, look at this one. I mean, this is the blue chip ETF. This is the top 50. Eli Lilly has just been a monster since earnings, and it hasn't pulled back. Walmart has just been phenomenal since it dipped after its earnings. I'm going to Walmart today. XLY, Qualcomm. I mean, Qualcomm is still a buy in my opinion. Devon Energy at 51. Talked about that one. Anything over 50. 8. I'm not freezing today. Good. I need to put on my headphones so I don't look like a douche. So I at least can talk correctly, because I think I talk worse with my headphones off. Okay. And I'm going to move this down here so I can see the chat. It froze. If I freeze again today, it's everybody's job to tell me that I froze. Simon Property Group. I mean, it looks like I'm going to do it again. I mean, nothing in the core portfolio. Anything in brokerage holdings. I'm going to look at, let's go to Strategy Tester and we're going to look at this run. I want to make sure that the data's not bad. We're going to look at Apple. We've been in. I know that. Amazon. I mean, look at Apple. Apple's covering the gap. Covering the gap up to 191. I said, maybe we get to 160. Did we ever touch 160? Nope. We got to 170. I said add on the way down. I added on the way down. I think it was a dividend payment ad, though. Amazon, Boeing, we're in. Bank of America, we're in. Cleveland Cliffs, we're in. Costco, we're in. Disney, we had the cross up, we're in. Devon, we're in. FBCG, we're in. Google, Be clear, I wouldn't chase Google on this one. I think you'll have a chance to buy it under 130 again. Could be wrong, but I don't know that I'd necessarily chase it. If you're only buying like 1, 2, 3, 4 shares, something like that, just buy it. The $10-20 that you're going to save isn't worth it. Coke, you're in. Wait till that goes under 60. Eli Lilly, you're in. Meta, you're in. MPLX, you're in. Moderna, you're in. Microsoft, you're in. Netflix. I mean, this is a bull market. Nvidia, we've had a full week of up. Nvidia, you're in. Oxy, you're in. PanW, you're in. Pepsi, you're in. PXD, you're in. This one had a cross up yesterday. QCLN, you're in. This one's rebounding. I think clean energy is starting to bounce back up. Qualcomm, you're in. Roblox, you're in. Shopify, you're in. Snowflake, you're in. Simon Property Group, you're in. Target, you're in. Tesla, you're in. Oh, God. You know, I got to go to the market scanner and find stocks that crossed up yesterday. I just don't have any. I mean, because everything in that group that I just went through, you're already in. Let's see. Let's look at mega caps above 200 billion. Anything cross up yesterday? No. Let's look at ARC Holdings, because these always have something. Archer Aviation. I mean, look at that run. Good Lord. ACHR. Eastman Kodak. I mean, why would I want to buy Eastman Kodak? Buckle. I've been in a Buckle store. You need to put on cologne, open your shirt up to your belly button, and have a belt buckle that is not too large, because you don't drive in Ford F-150. You drive a Mini Cooper. CME. Poof. There's just not a lot here. Let's see ARC W, because I want to see it. Well, that was all the ARC, so that was all ARC Holdings. So I don't need to go through there. We will look at halts in the last 7 days. So these are highly volatile stocks. Morning, Sajaji. I think I said Sajidal. Sajidali. Did I come close? Just say I came close. Stroke my ego a little. I'm horrible with names, and I'm sorry. I don't mean to offend anybody, but I'm just horrible with. I'm a white dude. I'm unapologetically horrible with my accent. My tongue doesn't work. I'm blaming it on my wisdom teeth. ESBA. I mean, these are all halts that have been halted. ESBA, look at this candle. I mean, that candle right there is a 13% candle. Let's look at, and I'm just trying to find something. Let's look at the top mentioned Wall Street bets. Any stocks in the top mentions of Wall Street bets? AMC has a cross up. I mean, AMC is bouncing off. Christian might be right. Morning, Scott. Scott, you missed my description of Buckle, which I think was worthy. Listen, if I didn't know better, I'd say AMC is coming to fill that gap. I doubt it, but God, let's go. That's just a stock. This is what's great. I mean, look at TrendSpider. You can do Wall Street bets. Let's see. Top traded retail investors of the last 7 days. Let's scan those stocks for a cross up. I'm using my algorithm to see which of these stocks gets you in. Nothing. I mean, you're already in most of these. Let's look up the Dow Jones 30, KBW bank sector. This is the regional banks. This is the K, and there's nothing. Nothing. And I don't need stuff to talk about. I got tons. We can look up the Russell. Any of the semiconductors. Let's see if the no, nothing in the semiconductors. Let's look up the Russell 1000. This is the small medium. It's 991 symbols. So I don't think the data's wrong. I just think we're in. Look, this is going to come up with so many. It's going to come up with probably 500. I need to put in Tesla cut prices and introduced a remodeled Model 3. Good news. May upgrade. Bum, bum, bum. Yeah. Core inflation was up yesterday, but it wasn't up as much as expected. And so while it was up, I thought we were going to go down as well. I was a little bit hesitant about yesterday, but wow, FTC allows AMZN to move forward with $28 billion Horizon deal. There was a great discussion yesterday that I listened to, and it was on CNBC. It was John Fort who does the On the Other Hand stuff, and I hate that On the Other Hand stuff, but he's right. The market always has an other end. And he said he was trading with his kids on Investopedia. Investopedia, I guess, has a paper trading option. And they were all going over, essentially there were three anchors, and they were going over the reaction to earnings. And Scott, it kind of correlates with the core inflation in that if you could tell what the market's reaction would be to earnings, that wouldn't make earnings so difficult. Because you saw in the first couple of weeks of August, we had good earnings reports and the stocks went down. They had just run too much. You had really good earnings reports. Stocks just ran too much. Bond rates started to rise and stocks started to go down. So yesterday it was interesting because the bond rates, higher inflation, and bond rates started to move downward again. And, your guess is as good as mine at this market. There's two things you don't fight: a trend and the Fed. But God, I mean, look at all of these scans. Look at this is all. You can do tobacco, textiles, steel, iron ore, specialty foods. You can scan the retail sector. You can scan restaurants. Rental leasing companies. There's 8 rental leasing companies. Railroads. Publishing, professional services. Paper, packaged goods. You can trade anything that you want. Let's see if there's a technology sector. I know there is. We're going to look for technology. I'm a tech investor. So overwhelmingly, there we go. 843 symbols we're going to scan. IVAC, no idea what IVAC is. GEG, no idea what this is. PSTG, no. Oh, that's Pure Storage. I know Pure Storage. They're up 3.6% on their earnings. TMPO, Tempo Automation. TROO. KD. BURE. BRUU. DWACW. Oh, this is Digital World Acquisition Warrants. I was going to say I know that one. FDS. I've seen this. FactSet. Okay, that's FactSet Research. I know FactSet. GSD. Global Systems Dynamics. These are all these are cross-ups. And in pre-market, ASTI is down 2.81%. This is Solar Technologies. Oh, good luck to my Sedge. Where is Sedge? Yeah, it's leveling off here at 160. I mean, it's just kind of doing nothing. It's a nothing burger. If we go to the strategy tab, I think I'm done scanning. I mean, there's only a couple that I put down, only 2. So, I have let you down today. I got nothing today. Okay. And people are coming in and leaving. That's weird. I froze yesterday. I won't freeze again today. I think it was because I was running Active Trader Pro. I think Active Trader Pro is just a memory hog on Macs because it uses a Windows shell. And I think when you run it with OBS, it just takes away everything. Okay, we're just going to do it with this. I'm going to start here because I don't want to wait around. I got to get my day started. It's such a nice day outside, and it's going to be so nice. I do want to go. I walked 6 miles yesterday, so. And I am on no painkillers today. No painkillers. Oh, let me find this. Let me see. Twitter. I guess I can go to x.com now. We're going to go to TrendSpider. Yeah. I have this note. NVIDIA insiders have cashed out on $27 million in shares so far. Do, do, do. 68% win rate. Wow. Let's put that in. We'll take this. And we'll put this in here. Okay. We're going to look there. Do, 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 do. Oh, monthly hammer. This is nice. We're going to import this. Log in and import. Subscribe. These are all strategies. That's how easy it is to import a strategy in TrendSpider, by the way. That's how easy it is. And now we have a, let's see, we're going to, monthly candle. Let's see, did it? We're going to go to market scanner. And then, I think is it in this one? Let's see. Monthly hammer candle. Here we go. And you can scan the S&P 500. Boom. Here is the monthly hammer. Wow, a lot of them. Tesla, monthly hammer. And what a hammer is think of the top. It's not in these bars. It's in the, I think it's in the candles. But I use bars. So, I just like bars. See that little, there. We'll zoom in. See that little part on the right? It is where the closing, so the bar on the left on this candle, the bar on the left is the open price. The bar on the right is the closing price. If the closing price is near the top, it's called a hammer. Like this one right here, that's a hammer, monthly hammer. And it's usually a very bullish sign. So, but that's how easy it is to import stuff into TrendSpider. You just click on the link and hit import. And they share it all the time. They really do. They're good about that. Yeah. We're going to look at that one. Okay. So this is essentially, I mean, that's that's a look at it. You got the 2023 low, you got the 2023 high, and you've got this volume level right here, which is where it's kind of put in at 105. It's kind of put it in. There's your, I guess that's your 50-day. They usually use 50-day as the, but we can go over here and look at it too. I like AMD. I honestly, I think, ooh, news alert on Robinhood. Wow. Robinhood to buy back 55 million shares seized in case against Sam Bankman-Fried. Yeah, that's pushing the stock up. Robinhood has the best, by far, the best mobile app integration by far. But it's such a bad brokerage. They don't give you anything. I mean, it's just a mobile app. That's the problem that I have. Okay, let me go up and look at my stuff. Oh, let's go to Fidelity and look at the bond rates. I need to pull up the bond rates for this. Okay. And news and research, fixed income. Okay. We're going to do the podcast now. I'm going to start. I want that. I want this. Let's see. Are there any insider buys that are big? Insider buys or sell. Ooh, look at CBRE. Real estate. Dude sold $101 million worth. Wow. GSAT. Talked about GSAT yesterday getting the pump. Paul Jacobs sold $41 million worth. Here. GSAT, they announced a new CEO. Former Qualcomm CEO to lead the global satellites. Paul Jacobs, CEO, on his exit, sold 36 million. Or I'm sorry, 36 million shares, $41 million. At, let's see, it was $1.13 upon his exit. Yeah. What's it trading at? $1.13. It's at $1.44. Dude sold at $1.13 and it's at $1.44. Whew. That's some regret. That $41 million, closer to like $80 million. Whew. Let's see. What's $1.44 minus $1.13?
It's 31 cents.
What's 0.31 times 41 million?
That would be 12,710,000.
Dude just left $12 million on the table. Larry! That's crazy. That's just nuts. Okay, where are we with oil? Natural gas is up 1.19. Oil is up 1.18. We're doing well. Okay. Let's start this. We had an afternoon red candle. Okay. I'm going to start recording. Good morning. It is Friday, September 1st. First day in September. And it's the third day of TrendSpider's Labor Day sale. So today it's 63% off. Huge response first 2 days. Again, it's only $7, 7 something. If you sign up today, it's $366 for the year. If you tell me that you can't save $366 through your trading, whether it be trading on the upside to save you from the downfall, or trading on the downside, creating a windfall of profits. If you're not trading enough, $366 does seem like a lot. If you're not trading enough, if your portfolio isn't large enough, do not get this. Go and get Webull. D-Man told me Webull has the 4-hour. You can absolutely 100% recreate the charts. You can't recreate the bells and whistles that TrendSpider has, but you can recreate the charts in Webull. So if you want to sign up for Webull, go to Linktree, linktr.ee/daily stock pick. This third link right down here, you get 12 free stocks. Put $100 in there. Put $1,000 in there. Put $3 in there. Get some free stocks and get their desktop software. That's the key to Webull. But again, if you want the best of the best, I think it's TrendSpider. You guys know TrendSpider is central to my system. When you sign up through me, you get my 4-hour algorithm. You get the 65-minute algorithm. You get all the watch lists that I use to scan. You get all of the scanners that I do every day. So next week, I'm going to be in Dallas. I will be in Dallas from Wednesday until Sunday. And I will not be coming back on Monday, so I'll be taking an extended time off. So get TrendSpider, because then you can do my show in your own living room at your own pace. You won't get the entertainment like me describing a gentleman that goes into the buckle store. I had an experience at Buckle. I wasn't cologned enough. I didn't have my shirt opened up. I was not properly self-tanned. And so Buckle was the Buckle attendant was not very kind to me. I walked in there and said, "Yeah, where are your 75% off shirts?" But yeah, at TrendSpider, I'm telling you, it's a free 7-day trial. You got Labor Day off. Sit in for the weekend. Do some charts. Understand, TrendSpider. You can go to my YouTube channel. You can go to TrendSpider's YouTube channel. If you go to my YouTube channel, the one that I would tell you, it's on the front page. The reason I put this on the front page is because I have so many people signing up that I wanted people to look at it. But when you go here, rather than when I'm live, you'll see a TrendSpider video with myself and David from TrendSpider. I include that in the welcome letter. You can 100% see it on my channel. It's a really good overview of TrendSpider. But I would urge you, if you're even thinking about it, it's Friday. Get it for 63% off. Try it for the weekend. You won't get live charting, but you'll at least be able to scan for Tuesday. I'll be back on Tuesday. Remember the process. The process is, one, you sign up using my link. It's down below on any of the platforms that I'm broadcasting on. And then two, you email me at dailystockpick3@gmail.com. If you need that email address, it's on the link tree. It's up here in the upper right. But that's step 2. Step 3, I email you back. But just remember to use my link, because there were a couple of people who aren't on my program. I can always do it in the back end as long as you email me. But there's no automated system for me to send you and for me to put you under my program under TrendSpider. So just make sure that you email me. So let's get into the markets. Unemployment rate came out at 8:30, 3.8%, huge. The job market is slowing. That is a big jump in the jobs. Hourly average wage was up 0.24% in August. Bond yields fell. Stocks are up. You have to understand, bond yields right now, the 10-year is at 4.09. It's at 4.1. Say it's 4.1. But you want to look at that bond yield. The 10-year bond yield is key. Katie Stockton, who's a technician, was on CNBC this morning saying that the high from last October will not get broken anytime soon. She doesn't think it's soon. That was 4.34. 4.34 is a high mark that if we break it, there's no resistance until 5.25. Again, it's currently at 4.1. So, you've seen when bond rates go up, how fast this market can change. So if it does hit that 4.3, be extra careful. There are some technical reasons here to be cautious. That's essentially what she's saying. She says don't chase the grade 8. We'll see a decent pullback on some of those. Apple at 189. I don't think that you chase this one. If it's a long term and you thought you wanted to get it at 175, that's $15. If you're buying like 5 shares, what's that, $50? Who cares? Just buy it. The best time to buy a stock that is in an upward trend is today. It's going to cover this gap to 191. You might use that as a resistance level. Then you get back to the 200s where it was at. And you've got a September 15th, I think, 13th is the Apple event where they're announcing the new phones. You always kind of dip down because they don't hide anything these days. So be careful with that one. Amazon, it's under 140. I think these guys are going to play the AI hype. They have Thursday night football again. They're making understand that Amazon is an enormous advertiser. They could take on Google with advertising, with search revenue and things. So Amazon is enormous with this stuff. It's a great stock. Google is almost up at 140. I think you'll have another chance to buying it under 130. We got the buy-in here at 133. You've broken out on this ascending wedge. This is all 100% AI driven. 100% AI driven. Meta, they have their large language model, Llama. You can guarantee that these guys are just printing cash. The problem is they may be spending on the metaverse, and they may just be spending too much on the metaverse. That's the issue with Meta. It's not a revenue problem. It is a cost problem. The second they stop doing that and they announce some type of $20 billion buyback of their stock, it's a $400 stock again. Netflix, we've talked about, this is the only one that's actually making money of the streamers. These guys have pricing power. We'll come into that when we talk about Dollar Tree and Dollar General later. But this is one that has pricing power. They are cracking down on passwords. I have had 5 friends in recent times who are sharing their password, who are, by the way, getting their Netflix for free through T-Mobile. It seems it's very targeted towards these people who may not be paying or getting it as far as free services and sharing it with their friends. So they're targeting people and they're basically increasing their revenue. And that wasn't recognized in this earnings report. They said the reason for the drop was because we didn't recognize the revenue. I bought it back here at about 440. It's at 433 right now. I'm just going to add more. Honestly, you've seen the 200-day is going to provide you some support at 400. The difference between 400 and 430, I may be buying 5 shares. Who cares? $200, big deal. I'll make that when it covers this gap up to 470. And there's other gaps on this one way back. If we go a long term on this, you're not even close to the highs on this one. You're just hovering around the 200-day. So your highs are in 700s. I don't expect it to get there, but it could. Microsoft is another part of the grade 8. This is one I've said, hey, it's at the 200-day at 327, under 330. I think you can buy it. NVIDIA, I wouldn't chase it, but I tell you what, if I didn't have a position already in this, if I didn't have 5 figures into this stock, I'd probably chase it again. I sold at 505 and 510. More than likely, I'm going to have to buy at a higher price. But I think maybe you could get it at probably 460. But if you don't have a position in this, just freaking buy it. And then we talk about Tesla. Tesla is part of the grade 8 as well. And Tesla, I've got a car segment here that I'm going to go into below because somebody asked about NIO. But Tesla reduced their price of the Model 3. This is a clear confirmation that you've got to run. I mean, from 240 to 258 right there, there is a gap up here at 281 to 288. There's talks of this one, no resistance up until 325. So, again, my point is don't wait on a lot of this stuff. Just do not wait, because if you're waiting to start positions, you may be waiting too long. But again, September, it's kind of toss up. We'll go into that in a little bit too. Let's look at our weekly trades because we had a inside candle last week on SPY. So we talked about it. UDOW back here on the 28th. Cross up at 59.69. That was Monday. You're at $60.56. Not bad. You got up yesterday. The Dow was kind of the laggard, but you got up to 62.40 yesterday. Today you're up 1.65%. You're at 61.56. So get out of it. Don't be greedy on triple levered ETFs. Talk to anybody who's had one of these triple levered ETFs and they've held it over the weekend, and then Ukraine gets invaded. I was that guy. And it went down, and you could hold on to these if you want to. They're just decaying assets, though. You don't want to. You want to use these as trading tools. SPXL, which is triple levered on the S&P 500, we got in August 23rd at 80.88. You went on Monday. You went down to, let's see, the low was 86. You're at 91. Fantastic trade. So make sure that you get out of these. And our favorite, which is the NASDAQ, which has been overproducing on results this year. It's been out-indexing everything this year. I said, hey, we might be able to fill this gap up to 45. That's a little bit extended probably today. Today, though, you're up 1.79 at 43. You got in, let's see, on August 28th at the 9:30 candle. The low, it was below 40. It was at 38. 38 to 42. Let's just do a little bit math. What is 3 divided by 38? Well, no.
That would be approximately.
What is 4 divided by 38? $4. $4 gain.
That would.
10%. 10%. Don't be greedy. I mean, you got your 10%. If you got a full-time job, you can't do this kind of stuff. Personally, and I posted this yesterday on everything, DraftKings hit 30. In pre-market, it's at $30.17. That's a big jump if it opens up over 30. If it opened up under 20, under 30, I was going to sell it right away for a little bit of a gain. Buy it back when it got back confirmation. You're kind of seeing a little turnover, but you've entered this gap. And the gap goes up to 31.82. I do not hold a lot of this stock. I will tell you how much I actually own of this stock live and in real time. DraftKings, remember, football season's coming up. College and pro. That is the sporting event that just pushes sports betting. So I don't want to necessarily get out of this. I'd like to add to it. I own 200 shares. Which is just $6,000. I'm up 4% right now. But that's, and again, Fidelity says it's very bearish. My purchase price cost basis was $28.56. So I didn't even get in at this $27.36. I got in at the 28. But this is a great one. And it was no brainer. Because the Penn deal with ESPN, that's when this was announced. That's when you started to see this. That's when this gap happened. When the Penn deal with ESPN was announced. That's a nothing burger. Absolute nothing burger. Let's talk about NVIDIA because we've had some crazy insider selling on NVIDIA. And you're close to 500. I went over a little bit. I might have to buy again over 500. I'm going to add to this position. I already own five figures on this. I'm going to continue to add to it. I want 6 figures in this name. I really, really do. That's how strong they are. The valuation on this isn't nuts. But take a look at the August selling. EVP sold $2.3 million worth. A director, Mark Stevens, sold $25 million worth. He's the second largest NVIDIA shareholder and board member since 2008. That's not a lot of money for this dude. If he's the second largest shareholder and he only sold, 50,000 shares? That's not a ton. Look at how many shares they have out there. Shares outstanding, 2.47 billion. Shares floated, 2.37 billion. So, NVIDIA holds, 10 billion? 0.10 billion? 10 million shares. So, that's nothing. That's nothing. The CFO sold $2.3 million worth. So, even, and let's look at NVIDIA over here, because what we wanted to do, TrendSpider made mention of this on their Twitter. Over the last 20 years, the stock has a 68% win rate. Let's pull back 20 years. Let's see. We'll pull back to 1999. That's 25 years. September, 58%. Average return, 2.32%. So, yeah. It's not a great month, not a horrible month. I mean, come on. Again, don't expect this one to pull back. You're going to have to look at what your position is. You should be in it. This investor place, Magnificent Seven, stocks for September, 2 to buy and 1 to skip. Great article. I will put it in the newsletter. If you're not subscribed, go over to the Daily Stock. It's basically dailystockpick.substack.com. That's the newsletter. It's free. I will put this article, the Magnificent Seven. I'm blaming this on my wisdom teeth. That's what I'm blaming it on. But 2 to buy, 1 to sell. Great article. I read it. I like it. Go and look at it. Earnings. I'm going to go over this rather quickly and not in depth. I will include some other stuff in the newsletter if you want. Lulu, solid beat, solid quarter. Was down 2% when they announced. Probably selling. It's up 3% in the pre-market. So you can see $4.40, $2.28, $2.68. So that 440, you can see that gap up there from 321 up to 357. Hasn't been back down there other than into this earnings. Into this earnings, that was May. Just Lulu got killed. And then they basically shot back up. So this gap has not been totally filled. I wouldn't expect it. I would wait for this one to come under the 200-day. Anything under 370 in my mind would be a buy. Lower value tech, which is Dell. Dell killed it. Absolutely killed it on earnings. You can see last quarter was $1.31. This was $1.47. It's up 10%. It's up 12% right now. It was up 10% immediately afterward. They basically, the dude who kind of name drops, hey, I hung out with this dude and this dude, yeah, we're good friends, and just name drops all over the place. That was Dell yesterday with NVIDIA on the earnings call. They basically name dropped. They just threw shade. Now, here's the thing. The forward PE on this is 9. You want to talk about a cheap tech company? Forward PE is 9. Price to sales is 0.43. Now, it's PCs mainly. They did highlight their partnership with NVIDIA. Dell, you got a double top right here at 57. 52-week high is 58.72. You're trading at 63. So it is extended. From a long-term standpoint, let's take a look at a weekly chart. Weekly chart here, you're kind of coming up 67. It's all-time highs. On Dell, how many of us have had a shitty Dell computer? That's all I remember are the shitty Dell computers they used to give me at work. Nutanix, which is a tech company, which shocked me. I thought it was a protein shake. But Nutanix, big move, strong earnings, up 17%. I don't even know what they do. But you can see they went from making 4 cents to 24 cents. This is part AI. When I was listening to it with half an ear. Now, the one that was hugely anticipated was Broadcom, because Broadcom has had crazy good quarters. $10.32 a share, $10.54 a share. It's not a crazy valuation. If we go over to FinViz and we look, the valuation, it's 28, forward PE of 20. That is not crazy in the semiconductor industry. Not crazy one bit. They announced their earnings. They beat across the board. Nothing nuts. Pulled back 3%. They reduced guidance a little. They said they see a slowdown in their consumer business. That was enough to pull them back on 3%. I will say it again later when I talk about Dollar Tree and Dollar General. If you want to buy a pullback, this would be the pullback to buy. I would not buy a pullback in a low margin business that doesn't have pricing power. These guys are a high margin business with pricing power. If you're going to buy a pullback, buy this one. And yes, you are at all-time highs. This is a weekly chart of this. So if you just go back to COVID, this was a $160 stock. It got down to $155. 9 times. 9 times. That's crazy. So AVGO. MongoDB, which is the database company, they announced earnings too. Crazy good. Crazy. This one was up about 10%. It's only up 4% now. Immediately up 10%. This is a decent stock. I mean, again, you see 56 cents, and then they almost double it to 93 cents. The CEO was on this morning saying, yeah, there is a hype rally, blah, 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 but hype rallies tend to last longer. YMW, or is it VMW? VMware. This was announced that I think they're being purchased by somebody. They beat on earnings per share. Small miss on revenues was down. So it's down about 1% here. If you want it, you can go after it. PD, which is pager duty. Earnings per share beat, but slight miss on revenues. They got killed. They're down 11%. Earnings matters right now. We talked about Polestar, and I wanted to bring up Polestar because they missed on earnings. Electric vehicle companies remain in focus as earnings season comes to an end. Today, we're looking at Swedish automaker Polestar, which reported weaker than expected results. All the results will be in the newsletter. Despite the soft results, executive reiterated that their intent to deliver at least 60,000 EVs in 2023 with a positive gross margin. Despite management's optimism, the company will reach its goals and growing cash balance. Investors remain skeptical about its future results. Polestar shares fell 13% on the day and are nearing all-time lows. Earnings matter. This is a high cost business. Electric vehicles, even though these guys are backed by VW, they don't have unlimited money. And you can see it pulled back to 332. Is this one to buy? I like Polestar. I like their cars. The problem is they're just basically burning cash. And charging network, I mean, come on. Charging network is where it's at, and that's where Tesla has the advantage. Tech earnings are panic. Yeah, it's been shown. See, and here's the thing. We talked about it. In the beginning and middle of August, you saw earnings and stocks, good earnings, good stocks with good earnings, the stock dropped. And it wasn't anything. It just was, we were priced to perfection. Now you're seeing good earnings and the stock's popping. That means there's optimism. That means going forward that people think that we're going to continue to go up. September might be a good month. And what might be a good one? AMD. And take a look at this. The TrendSpider posted this. This is your 2023 low in January. This is your 2023 high. Look at that wedge that's forming. And it's forming going into September. This might be one of the great breakouts because AMD has not participated it hasn't been assumed as the number 2 chip maker, as far as technology goes. They are the number 2. NVIDIA is by far the number 1. AMD has some catch up to be made. But AMD is the number 2. And you can see with the June run up, you ran all the way up to 128. This one is up 1% at 106. I'm going to add more. It's under the 200-day. Take a look at a long term of this one. This one might have opportunity here. You're pulling back to this 200-day at 87. I don't expect you to get below this VWAP. We're going to pull this volume lever back a little bit. I'm going to pull it back to January 2020. Let's just go back to the last part of 2019. You can see COVID. COVID didn't matter too much for this one. You went from 56 down to 40. Big deal. You shot back up. Semiconductors. And then you had 2022, where you had the chip glut. And it just continued to fall. Your all-time highs at this one are 150. I think you get back there. Again, NVIDIA is at all-time highs. This one, I think, is clearly one that is set up for a breakout here. I like it. I like it a lot. Let's talk social requests. So if we're talking long-term trades, would now be a time to look at some of these companies like Dollar General. I seen they missed on earnings, gave a dim outlook. The stock is down in pre-market only as 18%. Would now be a time to look at trading this company. And this was from yesterday, and I got to it late. It was down 18%. It's down another 1%. I will put a good paragraph that I saw on Dollar General. The discount retailer reported $2.13 in earnings per share on $9.79 billion in revenues. Both numbers trailed estimates of $2.47. That's a big mess. $2.13 versus $2.47. Same-store sales declined 0.1. Expectations were for a 0.9% increase. Here's what you have to know about Dollar General. Dollar General, they missed on earnings, lowered their guidance, said shrinkage was a major issue. In the best of times, the margins on this business are super low. They also don't have pricing power. It's not like these guys, people are going in here, and saying, for instance, there's a sale on Tide. Their sale on Tide will be matched by Walmart. They just don't have pricing power. And so when you go to Dollar General, you're basically paying the same prices that you're paying at other discount retailers. The margins are super small. While rates go up, unfortunately, the consumers that shop at Dollar General are the ones who are crunched the most. So while these guys will do everything in their power to provide low-cost things to that consumer, they can't lower them if their costs are going up. So as costs go up, because higher for longer, these are the guys that are going to get squeezed. A company like LVMH, this is the, I think it's Victoria's Secrets or something. Let's see. I forget what it is. I forget. I thought it was LVMH, but luxury retailers. I mean, think about luxury retailers. Why do I have LVMH? Is that it? No, that's not it. For some reason it corrected my thing in notes. But those luxury retailers, they have 30%, 40% margins. They're growing by 40% per year. Dollar General has 6% margins. And you've seen they're shrinking. So how much can they actually do? If you want to pull back, by the way, if you want to pull back of a good stock, Broadcom. So, I have notes. Lower volumes remain a theme across the most industries. So if a company doesn't have pricing power, they're facing a double whammy and will likely continue to through year end. That's essentially it. I mean, understand, any reaction in the market is an overreaction. I just think that Dollar General, Dollar Tree, things with low margins, even Walmart. I mean, Walmart has pulled back on their earnings. They've shot up. Take a look at this chart. I mean, you just shot down 158.73. I own this one. Look at all that confirmation after really good earnings. But they have super low margins. They're number one, they're groceries. And that's a 6 to 7% margin. Unless you're Whole Foods, then it's like an 11% margin. So, I would not go into Dollar General. I think, there's an AI train that's still at the station in my estimation. We may have left, we may have made the first stop, but it's still at the station. Get on the AI train because Dollar General ain't coming back up. I just don't see it. Trevor asked me, how does your algo work on Micron? I just noticed it's up 25% year over year with a lot of up and down along the way. Maybe good to either own or trade. So here's the algorithm on this one. The algorithm doesn't work really well, but I will tell you that I think 65 right now would be a great price for this. I don't know if you're going to get it. Micron, you can see, I mean, Trevor's right. It's just been up and down. If we go to last year, I mean, let's just look at a weekly. We'll go weekly and we'll take this. We'll go back to, let's see. Let's go back to this week right here. We're going to take this. We're going to take it from the middle, from the top, and we'll go here. 20%. There you go. 52 bars. 52 weeks, 52 bars. 11%. I'm sorry, 19%. 19%. $11.39. Now, the key to this is it in a good place? Look at that long term right now. We'll remove that. You're above the 200-day. You've got this descending wedge that is providing resistance. Right there, it's providing resistance. I don't think you buy it here. I think you buy it anywhere around the 200-day at about 65. You'll have your chance. Patience. You'll have your chance. If you like this one, I think you can buy it. I like the company. It's not, if we go over to FinViz and we look at it, it's not super expensive. They're not making money. They're losing money, but it's a semiconductor business that probably will make money. You're trading on the future. The 52-week range is 48 to 74. You're only 6% below your 52-week high. You're extended. I mean, you're absolutely 100% extended. Now, if we go to the insider stuff, you'll see a bunch of sales. Nothing huge. I mean, the CEO, Sanjay, he's selling some stuff at about 70, but it's extended. I mean, everything to me tells me that it's extended. So I think there's better opportunities out there. I think there's better hype out there. I think you could absolutely buy that one for the long term and not look back. Travis from Facebook, how's HE doing? I've got family in Hawaii that agreed that the lines were shut off before the big fire. Today I read they are upgrading the grid, so it's $30 billion possibility. It's $30 a possibility at some point. No. And I'll tell you, I think this is Silicon Valley Bank rewritten. I think what this utility is going to have to do, they're going to wind up, there's gaps below to 9, and there's a gap above between 22 and 33. Could you get back to 30? You could. Is the risk good? No. I mean, in my mind, I think these guys are, it's the straw man here. They're going to get blamed for it. There's going to be some liability. And I think at some point in time, what happens is these guys actually declare bankruptcy, go out of business, sell at a reduced rate to another utility company. The utility company comes in. You know who's holding the bag? Shareholders. That's the way I look at this. I just don't see any way that it could come back from something like this. They didn't. It says they shut off the power, but I think they admitted that they didn't shut off the power. So I haven't been following it too closely. In my mind, I think there's better risk to gain that you can take in this market. This has been one where I think retail traders have said, hey, this dip isn't justified, blah, blah, blah. It's a utility. It's going to get back up. You may wait years for this this kind of stuff to make its way through the court. So you could be floundering here between 10 and 13 for years. And then the court's decision goes against them and you're at $5. Why would you tie up your capital like that? In my mind, I just don't think it's worth it, Travis. I just don't. William sent me an email. He wants to know my thoughts on NEO. I have traded NEO quite a bit to the point where I think it was 2018, 2019. I was trading Tesla. I was trading NEO. I was trading SPEV. I was trading all of that stuff. And NEO was almost going to declare bankruptcy. And it was, I think, in the dollar range. It was hyped up. So it was let's look at a monthly. We're going to have to go back to a monthly to get back to where I really traded it. But it was 2018, I think, when I bought my Model 3 that was built in a tent in Fremont. Probably 2019, it looks like. But it was around $7, and they were said to be declaring bankruptcy. This period right here, March 2019, that's a 48% move in a candle. The low was $4.90. The high was $10.63. So you've got quite a move in this that goes down, and then it comes back up. My buddy bought at $5. I think it was right around here, and I said, "You're crazy." Well, it got up to almost $4.53. Looks like the high is 64. Do I think it's going back there? No. They declared bankruptcy, I think, around this time or something. They were going to. And then the Chinese government put money into it. So that's how long I've been trading this one. NIO delivered 19,329 vehicles in August 2023. That's 81% up year over year. Still only 19,000. Li Auto delivered 34,000 vehicles. That's up 663% year over year. XPEV delivered 13,000 vehicles in August. That's up 43%. So NIO is not growing as fast as Li, which delivered 34,000 vehicles. Tesla cut their prices and introduced a new Model 3. So I don't think NIO's a bad play on this one. If we were to look at the 4-hour algorithm, 59, you basically lose 59% investing in the algorithm. It's got 33 positions. You lose, your average win is 10%. Your average loss is 8%, but you win only 33% of the time. So the algorithm hasn't been great on this one. But you are in a descending wedge with a support level back at about $10.41. You're trading at $10.66. Remember how I look at investments. I look at it things like this. If it's a good company with good earnings, with good management and good products, I don't mind if I lose money in the short term. It's like Sedge. I think Sedge is a great company. I think they're undervalued, but the entire sector is being brought down. And so I held Sedge. I'm down 40% on Sedge. I can dollar cost average that. A company like NIO, which is a Chinese company, which is highly manipulated, which is highly government supported, a company like that, in my mind, I think you can ride the wave if you're up for it, but I think it's a trade and not an own. And so, you look at the two different stocks like that. And Tesla, I think you could absolutely own it for 5 years and probably be up, even if you're down in the short term. With NIO, I'm not sure that's the case. So there's my difference between the two. I'm not downing NIO. Look at this one. I mean, you went from, this is August, where you were at 15, and now you're down at 10. Who's to say that you can't get back up to 15? I mean, that 200 days providing you support right there. It's clearly providing some type of support at about 9. The down part of the wedge, if you break that down part of the wedge and hold it, I'd be a little bit more concerned. But the 50 days moving down, your 21 days moving down, your 9 days moving down, and your long-term 200 days just moving kind of sideways. So I'd be a little bit careful. Now, if you were on YouTube Live, you saw I just couldn't find anything that crossed up on the algorithm. There was nothing in any of the predetermined watch lists. So if you just imported stuff's not broken. It's just we're in an uptrend. So Sundial, this is a pot company. This one soared. I mean, this was an 8% gain in the afternoon. Previously, Sundial entry at 182. It's at 181.5. And then another one. And the only reason I'm including these is not that I love these names, but they're hugely swing volatile, and they seem to have cross-ups. Archer Aviation. This is a secondary cross-up here at about 694. Your initial was at 647. I don't think it's coming back down here to hit that gap. I could be wrong. They're not making money. This is a crazy one. ACHR. Yeah, they're not making money. They're losing $483 million. So be careful with these. Again, the only reason I include them is because I couldn't find anything. If you've got any questions, hit me up. Remember, TrendSpider, if you're going to get it, you're going into a 3-day weekend, 63% off. I don't know if you can hear my dog crying, but boy, she's annoying. All she wants is to go under the damn blanket. Daisy, come here. Come here. Hey. TrendSpider, you're 63% off. So you've got $366 for the year. It's the best deal. You're going to go down to 60%. Take the weekend. Learn TrendSpider. I think it's a great, great offer. Again, if you can't justify saving $366 by selling out at a top, for instance, let's go to Apple. Apple, if you're going to listen to it and you're going to sell based on the algorithm, Apple, you make 46% with the algorithm versus buying and holding, you make 23%. if you're going to sell out here for a 20% gain and listen to it, and you've got enough shares and it goes down and you buy it at 177 and buy it at 175, then you're going to make, save $366. On the bottom side, say for instance, you want to buy Devon on the bottom side and just make money below 50. You can buy it here. Devon, you lose 25% versus making 73%. So when do you buy in Devon? Well, you buy under 50. And the algorithm's going to be able to identify when you buy under 50. So if you can't justify that because your account is too small or you don't trade enough, one or the other, don't get it. But $366 to me for a year is not crazy. Free 7-day trial as well. So that's one. If you don't buy that one, I would urge you, or if you're not used to charting, I would urge you, deposit some money into Webull. Use this third link down here. Deposit money into Webull. Use their desktop platform. It is by far the best. It's way better than Active Trader Pro in my mind. In fact, I may download it and start using it here on the air, here on the podcast, because I'm sick of Active Trader Pro. It's just I trade and, Fidelity's got all my money. I'm not bashing Fidelity. Fidelity provides great services, fantastic services. But Webull, better app, better software. Better people, Fidelity. So support. Those are the two things. The third one, subscribe to my newsletter, dailystockpick.substack.com. It's free. Costs you nothing. I don't put ads in there. I don't put a ton. Yeah, I promote TrendSpider. And I'm probably going to be promoting Seeking Alpha at some point in time because I think that's a good mix between people who just basically listen to me and then trade, or people who listen to me and buy and hold. Because Seeking Alpha, I think it's like $250 for the year. But they've got some pretty neat AI stuff that they've integrated into their software. So I've been talking back and forth with them. I haven't tried it yet because I haven't signed the contract, to be perfectly honest with you. So I don't want to pay for it until I sign the contract. But yeah, I might be doing that as well. So if you have any questions, you can hit me. Here's the link tree. The email's right here. Private Facebook group right here. Twitter right here. Instagram, YouTube. Hit me up on anything. Substack. If you made money, again, if you sell, tip me when you make money. So say you got into Shopify with me. Say you got into DraftKings with me. Well, when you sell, just hit me with a gift. Gift me with Venmo, PayPal, Cash App. It's all down here. I do this shit for free. So, I don't make a living at this. Trust me, you have to be a millionaire and have to sit behind the scenes and have enough money to live. This isn't a living. So I appreciate anything that you guys can give me because, Daisy's got some vet bills to pay. Okay. I will talk to you guys on Tuesday. Markets are closed Monday. Remember, triple levered ETFs. Don't be greedy. Pigs get slaughtered. Don't be greedy. Take the profits on triple levered ETFs. Take them. If you, for some reason, decided to go short, take the losses. Don't fight the trend. The trend is way up right now. Way up right now. So be careful. Okay, take care. See you. Have a great weekend. Oh, thanks, Lucas. TMF. What the hell is TMF? Total Monetary Fund? Is this a bond thing? Ugh. Pavin? TMF? Why not just buy a bond? I mean, yeah, it's 3 times levered. Just buy a bond. Hold on one second. What's wrong? What's wrong? Why? She's got your bed. Okay, come on. Come on. Come on. Come on. You're sitting there crying, and I wasn't sure if you had to go to the bathroom or not. TMF for me, Pavin. I'm not smart enough. I'm not smart enough to understand bond stuff. The algorithm has you in at $5.94. It's up at $6.14. Why would you trade this versus just trading TQQQ or something? I mean, I know this one's beaten down, but I just don't track bonds enough. Dylan, I would say when to buy and sell. You can't time the market, okay? That's first off. The first thing I'll tell you is understand your tax implications. And remember, let me see. There was a great newsletter that I had, and I think it might be a paid one. It might have been a paid one. Let me see. Maybe I'll give people a look at some of the paid stuff because this is a paid one. I know I put, that's a paid one. Let me see. We're not done going down. This isn't a paid one, I don't think. This is a free one. There's a great Investopedia article with suggestions on dollar cost averaging and things of that sort. Let me see. And we did get a 10% pullback. This is a paid one. I usually put there's Apple earnings. Alphabet. No, it's not in that one. I'll have to look for it. Let me see. This is the sales strat. This is a paid one. I know this is a great one. Here. When sell and hold, when to hold. Dylan, here you go. What hit me, these are great. These are great understandings. Risk tolerance. You have to understand. You could lose money. Buy and hold. Buy and hold is always, that you can't, if you're losing money, praying is not a strategy. Reasons to sell a stock, adjusting a portfolio, freeing up capital. A stock hits its price target, change in fundamentals, opportunity cost, change in ownership. This is a great article. Tax treatment. This one is a fantastic thing because, again, you have to understand your tax implications. Deciding which shares to sell, the bottom line. Selling an investment is like buying one. You have to make sure it's in line with your investing and positive goals. I mean, this article is fantastic, Dylan. I can't say it any better than that. So if you want great content like that, pay for the newsletter. I think it's $80 a year now, or $8 a month. But that article that I just sent you right there, this one from Investopedia, it's unbelievable. And stock trading, strategy, and education, you should absolutely take that course from Investopedia. It's not. I don't think you have to pay for any of this stuff. Investopedia is really good. But my best advice is, and from years, I will tell you, if you lose sleep, and this is the advice my grandfather gave me, and I always say this: if you lose sleep over an investment, you shouldn't own it. You just shouldn't own it. Because we all have different risk tolerances. And for instance, DraftKings, DKNG. This is one I bought. If you want to see when I buy and when I sell, subscribe savvytrader.com/daily stock pick. I have two portfolios. There's a trading portfolio and a core portfolio. The core portfolio is just stocks that I get in and out of that, I consider long-term holds. But here, August 11th. I purchased 300 shares at $28.53. I identified this as a $30 stock. Today, right now, it's at $29.57. It looks like it opened up at $30.18. So I'm less likely, I'm probably going to put a sell in here at like $31 or $30.50. It's lost a little bit of momentum here. If we look at a 5-minute, this is a trade, though. Identify your stocks before you get into them, whether they're a trade, a buy or a sell. Look at that. It just lost all momentum when it opened up. We're in September. People may be taking profits. So it's at $29.54. I may just put a sell at $30. And I may miss it, but I'll buy more on the downside. DraftKings going into football season, I identified 30 as my price target. I didn't sell it because of that gap on the 4 hour. If we run it again, I'll show you. This gap on the 4 again, it's $300 difference between 30 and 31. I don't know why I'm holding on, but I'm holding on. But again, take profits when you can. Because something like this with the MACD going up and the RSI kind of trending up to oversold, you can see right here, the RSI hit 65 and bounced right back down. That's where we started to go down. So you've got to figure out what a step. But when you buy the stock, you tell yourself, okay, I'm going to buy and hold this one. Like for instance, Sedge. I bought and I knew I would probably hold for a year. It got to 300. And we can look at this one on the trading portfolio. If we go down here, where's my Sedge? There. I bought 10 shares of Sedge at 257.78. 257.78. It's at 164 now. 257. It was right back here when I bought it. It got almost to my price target. It hit 299, I believe. But it used that 200-day right there as resistance. I should have absolutely understood that it hit resistance and sold it. But I said to myself, I want 300. I was greedy. I didn't do it. So now I don't mind holding it for a year and I'll dollar cost average when I decide to get back in. It's kind of capitulating here. It's at 176. That MACD is going up, but we've got divergence because the stock price is going down. That's not a good sign. So your any tips on knowing when to sell a position versus holding it? If you're not doing that type of analysis and you're just kind of doing, well, it's up and stuff like that, I would urge you to understand stock charts, technical trading, and fundamental trading. And if you just listen to this podcast, I mean, some of that's going to seep in where I go between TrendSpider and FinViz and understand, hey, you know, like Target. Target's a great example. I should have sold Target long ago, and Target is a broken business. I'm taking it out of the core portfolio. It's still got confirmation, so I haven't pulled it out yet. But obviously 130 right here, which I thought was support level, is actually resistance level. The 200 days still moving down, the 50 days moving down. I should have absolutely 100% seen that trail right there. It's a poorly run business at this point in time. Completely poorly run business. I thought as we started to see it go up that we were going to fill a gap up here to 185. Completely wrong. Should have sold it. So nobody's perfect. You're going to lose money. The key point is understanding you shouldn't live through that. And some people will get stressed living through that. I won't get stressed living through that. If I believe in the business, that kind of stress doesn't bother me. This stress now at that 120, where nobody's really doing anything to fix the problem for 3 freaking quarters now, that's when I have stress, and that's when I get out. So we've lost some momentum, it looks like. But energy is way up. Whoo-wee. I've been screaming get into energy. Okay. With that, I am out of here. It's 10 o'clock. I am going to put this episode together, put the newsletter out. Remember the process to sign up for TrendSpider is 1, click the link, go over to TrendSpider, click my link, and then you need this elite level. And then you're going to email me once you sign up and do it anytime over the weekend. And then once you email me, I'll email you back the welcome letter. Just make sure you're using my link so that you're on the program. So, okay. Take care, you guys. Have a great weekend. You're welcome, Nicholas. Glad to have you. Yeah, Scott. Chinese stocks have some benefit to them. I keep getting sucked back in reading your comments. Chinese stocks have some. I'd trade them. I wouldn't own them. I do think I've said, but when this was below 90 or at 90, I think Baba's worth the risk. I think it's $100. What's Barry saying?
The other two, Apple and Amazon Prime, are completely different businesses that have no business model relative to production of movies and television. It's just something they do to support their Prime or something they do to support their wallet system in Apple.
That's Barry Diller of IAC sounding off about Netflix on Kara Swisher's podcast, urging legacy studios to cut the streaming service out of negotiations with writers and actors. Diller says a strike lasting beyond September would be catastrophic.
Interesting. Okay. Yeah. Okay, so China, yeah, I would Barry Diller is saying legacy studios that don't have streaming services involved should cut a side deal, and Netflix and all those guys should cut their own deal, because it's clear that Netflix and Warner Brothers and Disney are clouding everything. And Walt Disney's down. Oof. Disney's down 2% again. I won't get back into that. I still hold positions in that. I'll dollar cost average when it's actually fixed. Should have gotten out of that one, but yeah. Oh, you're welcome, Scott. Again, you have to. I say this all the time. When you buy a product, you know why you're buying a product. When you buy a stock, you have to know why you're buying a stock. You have to know, when you buy a house, and you pick a mortgage, do you go with a 5-1 ARM, meaning that 5-1 adjustable, for 5 years you're adjustable because you don't think you're going to be in there long? Or do you go with a 30-year fixed because it's going to be the house that you're staying in? That's what you have to do with stocks. I mean, that's 100%. Am I going to stick with this? If the market tanks, am I okay paying a 30-year mortgage on this one? Because I love the area, I love the house, I love everything about it. It's just like a mortgage. 100% decision making there. It's why, I continue to say my portfolio, let's see. I'm going to look. I'm probably down today, I would think. Let's see. Let's go to Fidelity. I'll do an indices check on both Fidelity and Webull. Webull, though, I have bad stocks in Webull because Webull has given me stocks that just fuck up my portfolio. I am up 0.4. The Dow is up 0.6. Wow. The Dow is outperforming. I'm up 0.4. And let's see. My watch, for some reason on Fidelity, the watch version is better than the damn... Okay, year to date, I'm up 35%. So year to date, I'm up 35%. Let's see. Let's go to Seeking Alpha. And so I'm up 35%. Let's go to QQQ. And we'll do charting. And we'll do SPY, DJ, is it, and we'll do, what else, IWM. Okay, update chart. And we'll compare year to date. I'm up 35%. Look, QQQ, I'm underperforming. SPY, I'm doubling. Dow Jones, I'm almost 10 times. IWM, I'm like 3 times, 4 times. So I'm doing well. And that's what I say is you've got to, if you're not beating some of these at least year to date, if not 1 year, take a look at your portfolio. Now, it's clear that the grade 8 are driving this 42%. And if I had 50% of my portfolio just in QQQ and subject to that, you'd be doing really, really well. But yeah, I keep an eye on it. And it's because if I start dipping, Apple has, Apple is shit. Let me see. I don't know if I can tell what percentage Apple is of my portfolio on this app. Let me see. Positions. It doesn't tell me details. I thought it would tell me at some point. Nope. I guess it doesn't. me see. Planning. No. Discover. Collections. No, they don't have anything. It doesn't have anything. Activity and orders. No. I think Apple is like, what, 30, 40% of my portfolio. So it's big. I mean, here, and this is why. I mean, it's a no-brainer for me. They put off billions of dollars in cash. They have great management. Look, it's up 51%. So I'm up 35%, which means the other shit's down, underperforming. I should have just put it all on Apple. I mean, you can see 1 year on Apple, you're up 19%. You're underperforming the Qs. 3 year on Apple, you're up 40%. You're doubling the Qs. 5 year on Apple, you're up 230%. You're doubling the Qs. Yeah. So it's doing well, and I'm thankful for that. But okay, I am out of here. See you guys.